Hey traders, Jason here from Leavitt Brothers. Happy Wednesday. I haven't talked at all about the coronavirus, and while I don't know anything that you don't already know, I'm going to offer my opinion on what the virus means for the market and where the market is likely to go from here. Okay, just my opinion. First, quick reminder, I'll be speaking at the Trader Expo in New York. It's this weekend. If you're around, come check it out. I'll be talking about how to use group strength to outperform the market. Again, it's this weekend. I'll be speaking at 5:30 on Sunday. Registration is free. There's a link below. You can check it out. All right. So we have this virus that started in China and is quickly spreading around the globe. I'm not going to comment on the virus itself because that's outside my field. I'm just going to stay in my lane here. But I can comment on the charts and where the virus fits in historically and what is likely to happen next, or at least what I think is likely to happen next. So let's get to it. Let's compare the current situation to previous instances in the past or events where the market has pulled back, and let's try and gauge. And I'm going to try and gauge, are we more like one or more like the other? Okay, so here we go. Here is the S&P 500 showing the crash in '87. Okay, this big crash here is '87. First of all, this chart is a 9-day chart, which means every single candle is 9 days or almost 2 weeks. Okay, so you can see market was trending up. It moved down for about 2 months, and then it just completely collapsed. As you can see here, then it based for about 2 months because each one of these candles is about 2 weeks. It based, and then it slowly started to move up. And yes, it took, what is this? It took like 2 years to actually get back to the high, but all the selling took place in a relatively short period of time. The damage was definitely very stiff and severe, but all the selling took place in a relatively short period of time. Things got back to normal within a couple months, and then the market just started to gently, slowly move up. Okay, so that's one example. Next, we have, so let's see here. I gotta get my tool out. All right, so we have the Asian financial crisis happened here, and we have the Russian financial crisis happened here. So there was a delayed reaction to the Asian financial crisis, and in the end, the market just simply moved sideways in a range for several months. Eventually, righted itself. There's a 2-week stiff period down. Eventually, it righted itself, and then it started to trend up, and these are all all-time highs. Russian financial crisis lasted a little bit longer, so we got about 3 to 4 months. The dip, from the high there to the low there was about 25% or so. Lasted a little bit longer, went a little bit, deeper, but eventually righted itself and obviously continued up into the late 90s and into the early 2000s. Okay, then we have the dot-com bubble era. Okay, so huge rally, tops in 2000, and now we have a 50% pullback. And depending on where you want to measure here, we have this thing lasting like 3 years. Okay, much bigger, last longer, 50% drop. Obviously, much different than the previous examples I just showed. Then let's go to the housing crisis, the financial crisis. Okay, again, we have this thing lasted not as long as the dot-com bubble bursting, but it still lasted 18 months, 20 months, somewhere around there. And it too was pretty severe. It went about 50% or more. Okay, it lasted longer, lasted a long time, went pretty far. Let's look at the next example. All right, here is, I'm going to focus in on the end of 2018 right here. Okay, so we had a stiff drop in January of that year, and then we had we had October, November, December drop at the end of the year. So it lasted about 3 months, okay, from the high in September, late September, to the low around Christmas time. It was about 3 months, and it was a stiff drop, but certainly not a 50% drop. Okay, so this was caused by, it wasn't any particular thing, but it was a combination of trade war, recession fears, stuff like that, mostly involving politics. All right, so now we have, today is right here. Okay, so today if I had a caption on this side, it would be like, this is the coronavirus drop. Okay, so we're like 2 weeks in not quite 2 weeks in. We've had a big drop and a bounce off the low. So the question is, whoops, wrong slide. All right, so the question is the current situation with the coronavirus more like the big drops we've had, the dot-com bubble era, the financial crisis, or is it more like the Black Monday, the Asian financial crisis stuff, where we got a drop that was moderate and only lasted a few months? Okay, so let's compare them and let's see what we're most likely going up against. So with Black Monday, the Asian financial crisis, Russian crisis, 2018. They were terrible isolated problems that needed to be solved, or they were just a huge overreaction to issues that weren't as big as thought. Okay, but nothing was terribly wrong. The market took hits, as I've said, but the selling didn't last long. Okay, so the hits were anywhere, mostly in the 20 to 25% range. Okay, at most, and they lasted anywhere from 2 to 4 months. Okay, but in hindsight, they were pretty much just normal corrections within uptrends. The dot-com bubble and the financial crisis, these were different. Okay, something was structurally wrong. Okay, many companies went bankrupt, unemployment surged. There were major issues that could not easily be solved, and because there was a lot of leverage in the system and so many entities were linked, when one domino fell, it caused a ripple effect all over the world. Okay, it would take a lot of time to heal, and because of this, we got pullbacks that lasted 2 to 3 years, and they went for like 50%. So the question is, what is the coronavirus? Okay, what is it more similar to? Okay, is it just a terrible problem that will cause a correction, but once it's solved, all will be back to normal? Or is something structurally wrong? Is there a reason to believe that there'll be some sort of domino effect that will ripple all over the world and cause a total global meltdown? Okay, in my opinion, at the risk of sounding completely insensitive to the people who've gotten the virus and to those who've died, I think this will be a relatively minor inconvenience within a great big bull market. Okay, every year 50,000 people die from the flu, so the fact that only 3,000 have died from the coronavirus is actually pretty small. Okay, I know it sounds insensitive, that's just the truth. Okay, nothing is terribly wrong with the system. During the dot-com bubble days, we knew stocks were grossly overvalued. We knew companies with 15 employees and no business model were worth hundreds of millions of dollars, and in some cases like over $1 billion. Okay, this isn't the case today. During the financial crisis, we knew housing prices were completely out of control. We knew that there were people buying 2, 3, 4 houses pre-construction, trying to flip them. And we knew that everything was so linked together and there was so much leverage in the system that when it unwound, it was going to be pretty ugly. Okay, but that's not the case today. Okay, that's, housing has rebounded in most of the country. In some parts of the country, you could say it's a little bit rich. But it's certainly not grossly rich. Okay, there's nothing structurally wrong with what's going on today. Apple and Microsoft deserve to be trillion-dollar companies. If the system was broken, WeWork would have gone public with a huge valuation. Uber would be, worth a lot more than it is. Okay, it's entirely possible the market legs down further. Maybe we'll go down another 10%. Maybe we won't see a bottom for another month or two. But when we get a bottom, there will be some fantastic buys. Okay, here's an example. Here's AYX, a stock we've played at Leavitt Brothers. Huge steady rally up. This is the monthly chart. Resistance, resistance somewhere up in here near 145. If the market legs down again, and this stock drops down to 120, 115, 110, and then the market rights itself and this stock breaks out, my price target is going to be up at 200. Okay, there are a lot of charts out there like AYX. Okay, super high quality stocks being offered at discount prices. I think the current weakness, and again, I sound a little bit insensitive, but I'm here to trade and make money. I'm not here for any other reason. I think the current weakness is a gift, and even if it lasts into the spring or maybe into the early summer, we'll get a chance to buy super high quality stocks at very good prices, at least at very good prices relative to where they were a few weeks ago. All right, so That's my opinion. I'm not going to say like this is just going to blow over, but I do think in hindsight this will just be a minor interruption or minor inconvenience within a big bull market that is likely to keep going much higher and for much longer. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button here. Come say hi at the Traders Expo if you're in New York. See you next time.